This is Paula Waterman.
And this is Chris Waterman, the Denver mortgage guy.
Today we're going to talk about ARMs and if they're ARMs adjustable rate mortgage, if that's a good option for people and what's out there. But before we do that,
make sure you like, follow, and subscribe, especially if you're watching this on YouTube. We'd love if you subscribed, liked, and even commented on our video.
So today we want to talk about adjustable rate mortgages. Are they back? Are they worth doing it?
Yeah.
You know, I get a lot of people, like everybody, we all get mailers and, junk mail and stuff from I'm not going to name them, but the big box mortgage people.
Yep.
And they promise a lot, but they don't really deliver what they say they're going to promise, right? I mean, there's a lot of fine print that we kind of need to get through. So maybe you could talk a little bit about that, babe.
Yeah, so an adjustable rate mortgage is an ARM. You heard of ARM, and there's a lot of misconceptions about ARMs. So adjustable rate mortgages were actually a big deal 2000, 2001, 2003, all the way to 2006 or so, 2007. But they were short-term loans. And ARMs are one of the main reason that there was a real estate crash and real estate bubble.
Right.
All right, so we want to do a little history about that. And the reason is those ARMs, a lot of those ARMs were a 2-year ARM, so they were fixed for 2 years. And back then, the rate might be 6.5% or 7.5%.
As an ARM.
As an ARM, that's where it starts.
Yeah.
The problem with those, after 2 to 3 years, they would adjust, and they didn't have, they had a 3% cap on the loan. So if you got 7.5% interest rate, and let's say interest rates have gone up a little bit, you could be looking at 9.5% or 10.5% interest rate. And so what happens when people's payments go up $200, $300, $400, $500, $600, and they put no money into the property because they got 100% financing, that's what happened to our market then.
And they would just walk away from the property.
They would walk away from the property.
If they couldn't afford it, they just walk away from the property.
Yeah, so ARMs were a really big deal. Well, in 2010, we went through a lot of change and a lot of regulation in the mortgage side of things, and we hadn't seen any adjustable rate mortgage in the last 10, 11 years.
Yeah, they just didn't exist.
Nope, didn't exist. The 30-year fixed, and 15-year fixed, and 20-year fixed, 25-year fixed, but fixed rate loans really were more popular. The rates had come down, so most people would get an adjustable rate mortgage because they want a lower payment, right? Well, when fixed rate loans were
3%.
Yeah, when they were 3%, 4%, whatever they were.
Why would you get an ARM?
Yeah, and there were no ARMs available.
Yeah,
you couldn't even get one if you wanted one.
No, and it was because of the housing bubble, right? We went through this big housing bubble. It was the Great Recession, actually, right? And so what happened was all this regulation came in, and they were like, hey, you can't even do 100% financing anymore. People always have to have skin in the game. They have to have good credit. There's a lot of different regulation, which is why we're not in a housing bubble today.
We are not in a housing bubble right now, no.
But, ARMs were kind of one of the things that contributed to that, right?
True,
but now we're seeing some ARMs come back, right? And a little bit, not quite the way they were.
Oh, they're way different than they were.
But I mean, are they really an option?
Yeah, so you're gonna hear radio ads, you're gonna see TV ads, you're gonna get junk in the mail, you're gonna get phone calls from people talking about they have an adjustable rate mortgage or an ARM loan that's 4.5% when fixed rates are maybe 5.5%. Just as an example, right? And it's a lie. I have to say it's a lie. So ARMs have not, they're available, but they're really expensive to get.
Right.
Expensive meaning a 30-year fix, let's just use 5.5 at the market we're in right now. They might be a little higher, a little lower. An ARM is going to be at 5.5 also. But you can buy that rate down to maybe 4.9 or something like that. You can buy it down half a point or a point, but you're going to pay tens of thousands of dollars to do it. So the new marketing trick right now is to advertise, hey, get an ARM, get a 5-year ARM. It's going to be fixed for 5 years or a 7-year ARM fixed for 7 years, and you can get this interest rate. They're buying it down, and they're going to charge you a ton of fees.
It's almost like a bait and switch, right? A little bit.
Yeah,
because
I don't even know if we can say that anymore, but it's a bait and switch.
I mean, what it is they will advertise a rate, but they won't tell you what it costs to get that rate. So let's just say you want a 4.5% interest rate, it might cost $10,000 to get that. And then what you need to do is you need to figure out how many months is it going to take you at 4.5% to recoup $10,000, right? That's the way you do the math. You have to decide, listen, if by the end of the 5-year ARM, have I recouped $10,000 back after it adjusts to whatever it's going to be at the end of 5 years. So it really is a sticky wicket to look at these arms, and you need a mortgage professional to help you, because if you just go off the what they're trying to tell you on these ads or on the radio or whatever, they're not going to explain all this stuff to you. They just want to sell a product. They don't want to do what's best for you as a client or a customer, right?
Especially, I would say this, if you're in Colorado, and we're licensed here in Colorado, so we help people in the Colorado area, all over Colorado. We do a lot of real estate in the Denver metro area and Douglas County and all the different counties in Colorado. Don't believe these big box mortgage companies. And you know what I'm talking about. I don't want to say the Walmarts of the mortgage business. They're not getting you any better rate or any lower fees. The rate is going to be probably higher than we get. In fact, I would, because we're brokers, we can get better rates than them. That's why we're brokers. We have the ability to shop all these different lenders. And realistically, most of these wholesale lenders, the rates are pretty close to being the same. There's nobody a whole half point better than anybody else. Don't believe it. Most of us out there have access to same or similar rates. The bigger shops, though, the big box shops, they have to pay for those radio ads. They have to pay for the direct mail. They have to pay for the TV ads. Where do you think that cost is coming from?
They have a lot more overhead than what we have, right? Because we're local. We know our market. We help clients. We get a lot of word of mouth referral. I mean, right? We just get past clients. It's because we know what we're doing and we're professionals.
And we're super competitive. If you want to talk about rate, I mean, we don't talk to these rate shoppers that are calling everybody. I'm like, go on to somebody else. Most of our business is by referral. We do a lot of business with our past clients and their family members, and that's who we want to. That's who typically we want to work with. Those types of people.
We want to work with people who like us and trust us, right? Because that's who we are. We are super competitive. We're super helpful. We're very professional. We know what we're doing, and we're experts in this market.
You know what? We've been doing this a long time. We've been doing this a long time. We'd love to be able to help you out. You have any questions on any mortgage or real estate related information, our information's on this page, or you can go to Waterman Team Realty, or you can go to Denver Mortgage Guy.
Absolutely. You'll get both of us.